Good evening or good morning, everyone. On Tuesday, the stock market basically had what I would call let's bide the time kind of day. Overall, we had a good gap up in the morning, but stocks were not able to build upon those gains throughout the day. Actually, they were, but in the final hour, specifically in the final 15 minutes, we sold back off towards the open, meaning that the Nasdaq opened at 33.50 but closed at 33.47, which means it opened higher than where it closed. Good day overall, but that's never the way you want a session to end. And on top of that, following the doji day, the session before, volume was lower today on the rebound, so there wasn't a whole lot of oomph behind the move today. So overall, I'd say that if anything, watch out for resistance to the 50-day moving average, and definitely watch out for resistance around the 34.80 level. But we'll see where we act from here. Today, I would say, was a decent day, a good day for our current holdings, but overall, just really not a day you can psychoanalyze. New York Stock Exchange, once again, decent day, up 1%. Actually closed higher than where it opened, but volume was lower than the session before. The Russell 2000, you can just look at the iShares here. You can see it opened up and closed only slightly higher than where it opened. How did the actual index do? You can see that on the index it was a little bit stronger, up 1.07%. However, the lower volume was a little bit problematic. The S&P 500, as you can see, up 0.95% on the day. Volume once again lower than the day before, and the Dow Jones Industrial Average up 0.69%. Volume lower than the day before, and once again we did not close near the highs. So overall, while it was a decent session, it was nothing more than decent. And on top of that, we didn't have any new long positions even come close to triggering. Let me open up my notes here and see what my favorite stocks on the day were. I mean, I like the move that Away put in, so that could be building a right side of the base. SPWR piqued my interest with the base it's still making. Tesla still making a base. Solar City bounced off the 50-day moving average, but overall, and also Valiant Pharmaceuticals basing out quite nicely. But besides that, I wasn't that impressed. MTB hit a new high. That was strong. GMed made a nice move. That was strong. But overall, it just doesn't look great. We have a lot of charts that look like this, like Yahoo and Google. There's a lot of charts out there like that. And then, of course, stocks like Apple. You'd want to see these stocks trending the other way if you believe that we are about to rally higher. If you are looking for one strong group out there, though, the regional banking ETF is doing good. UMBF kind of shows you that. WAFD, I kind of saw that one today. And then there was another one I saw, SUSQ. I saw that one, and that was pretty good. Also, I noticed that Smith & Wesson's building a right side of a base, best seen on a weekly chart. But overall, no longs, and there were no shorts, nothing even close. And then the good news is that the gap up in the morning gave us a good fill with SQQQQ, so our new position actually ended up making money today. FAZ barely lost any money today, as you can see that we're down about 60 cents from where we went long. And UVXY basically closed where it opened, so we only made a tad bit of money. But the thing is that our new inverse ETF positions did very well today because of the gap up compared to the overall market, and at the same time our current holdings did well except for one. INSM is selling off on heavier volume. It broke through the 20-day moving average on strong volume on the 12th, but we were still under a neutral signal at that time, so it was only a 25% sell. However, now that we're under a sell signal and we've had another 20-day moving average break on heavier volume with a weak close, as you can see since then, a 20-day moving average break. On 6/19, we broke below the 20-day moving average, not shown on the chart here. There you go. And as you can see, volume is lower, hence not another sell, and the 12/23 close is above the 11/82 low, which means it's not an additional sell. The next day, we held those lows. The next day, we held those lows. The next day, we held those lows, closing at 12. 12 is above 1182, and all of those sessions came either on lower volume or with intraday positive reversals. So even though you see volume higher on this sell-off on the 24th, you can see we're closing near the high of the day and closing higher than where we opened. So everything's good. 12 is a close higher above 1182. That's why none has been sold. However, today We saw a heavier volume close below the 20, 10, and 5-day moving average on much heavier volume with a BOP going red. That's a confirmation sell-off below the 20-day moving average, so that's a 50% close. And in this environment, if we get another heavy volume breakdown below the 50-day moving average, I can guarantee you it's going to be a 100% close. Low volume break below 50-day moving average, another 50% sell. Heavy volume break, we're going to probably get all the way out because there's just too many stocks in the biotech world that are just looking really, really weak, and it doesn't matter if they're leaders or laggards. We see some weakness, so if INSM cracks again, we'll be completely out. But anyway, we're under a sell condition, but I believe that it'd be the wisest for everyone to stay neutral, neutral, neutral here. If we fail at the 50-day moving average on heavy volume, we will once again be adding to our SQQQ position, our FAZ position, and I would like to start adding 5% to the UVXY position if we continue to sell off. Because if you guys don't know your history, while it appears that there's a little bit of fear in the market overall, I want to use an arithmetic chart actually. You can see that we're nowhere near the 2011 low levels, the 2010 stock market low levels, much less anywhere at all near the 2008 low levels. So if you think 20's high, don't forget that most of the time you top around 40 or you bottom around 40. So that's a 100% move away from the 20 level. And then for real significant lows, you can move all the way to 80, 90, which is 200% away. Wait, from 20 to 80, yeah, so we're 200% away. And then 20 to 40, 40, 20, 60, nope, 300% away. So we're 300% away from 20 to 80, 100% away from 20 to 40. So keep that in mind for everyone that thinks that we have enough fear in this market for a bottom. We have nowhere near the level of fear that we had in 2008, and we're not even close to the 2010 and 2011 levels. So continue to be careful out there, everyone. Neutral, neutral, neutral.